Welcome, everyone. As Bill said, this was our October meeting of the Fiscal and Economic Issues Group. We're going to discuss data through September to the extent it's available, as well as what's going on in October. And let's skip 2 slides because Bill covered the next one. Okay, so we're going to have an economic overview. We're going to discuss the labor market to the extent we can, the budget deficit, a little bit of comparison of Democratic versus Republicans, shutdown stakes, household finances, and action. If we look at the overview of the economic situation, Trump, at the beginning of this year, Trump inherited perhaps the best economy in 50 plus years from Biden. Low unemployment, high real wages, decent real GDP growth, and record real median household income in 2024. The economy is starting to show some initial adverse effects of Trump's policies in jobs, GDP, inflation, tariffs, etc. We have the establishment survey, which is payroll jobs, and we also have the household survey, which picks up Uber and Lyft drivers and Grubhub deliveries and things like that. Your 1099 workers that are not payroll jobs. Probably also includes law partners and people like that as well. Stocks are up since Trump was inaugurated, and the stock market seems to be doing well. We do not know what GDP is doing, and we will not get a third quarter GDP number this month because the BLS, or actually the Bureau of Economic Analysis, is suspended. So anyhow, CPI, we will get a CPI number, I think on the 24th of this month, because the administration needs it for the COLA increase for Social Security. So that's why we're getting a CPI number, even though that BLS is otherwise suspended. So the real hourly wages were at a record level in August, but it was unchanged from the prior month. It's plus 1% from a year ago, and we don't know what it did in September because data. And the Trump Reconciliation Act was scored by CBO and private think tanks as a large deficit increaser that also increases the number of uninsured via cuts to Medicaid. Tariff revenue could offset most of that. It's sustained. Republican plans hurt the bottom to 80%, considering both tariffs and the tax bill. And we shift tax burden from the higher income levels to the lower income levels through the tax bill and the tariffs. David has some comments on this one that I missed. Okay, we've got Federal Reserve numbers that came out in September, and basically real GDP numbers. They think they're going to go up, but they think we may have real GDP growth in 2025 of 1.6%, which is not that great. Unemployment rate, they think may go up to 4.5% from the current 4.3%. PCE inflation, which is the Fed's preferred method, actually core PCE inflation is the preferred method, and they're thinking that those will go up around 3.1%, which is well ahead of the 2% target. But interest rates, they think, may actually be a little lower than they were forecasting earlier in the year. Now, if we look at and I mentioned this, we look at the effect of the tariffs and the so-called one big beautiful bill and we see that for most income levels, the effect on household income is negative. It's only when you get up to the 90th percentile that you start seeing positive impacts, and especially at the highest level. We're shifting the tax burden from the upper level income down to lower level incomes. And this does not include the increased cost of health insurance for the 20 million people who receive enhanced subsidies on the ACA exchanges, which is the big fight on the shutdown. So those would also tend to increase costs in the lower deciles, the lower income levels. Okay, so let's discuss the labor market. Normally, on the first Friday of the month, we get information on the establishment survey and the household survey. However, we didn't get that this month. Again, the BLS was shut down with the government shutdown as of the 1st of October. Although as a practical matter, all the data was compiled, and it would have been a simple matter of pushing a button to release the data on the 1st of October. The cynic that I am, I think the data wasn't good for the administration, and so they chose not to release it, but I could be wrong. It could just be coincidental. What we see is that through last year, we were having good job growth. And then this year, we have lower job growth. And this summer, starting May, we have really lower job growth. Okay, do we skip two going? Okay, that's fine.
In September, even though the BLS wasn't publishing the data for September, a lot of other think tanks and entities put out their best estimates. And so they range from -4 to about 60,000, depending on which source. The Bloomberg consensus, when they polled a bunch of economists, was 54,000. And back in before the Trump era of no immigration, 150,000 or better was sort of a good number. So if you look at 54,000 versus 150, that's one way of thinking about it. And we just don't know until the BLS publishes the data exactly what it would be. But we can look at some of the historical numbers and compare that against these other numbers like ADP, the large corporation that publishes the private sector numbers, and we can get a sense of that it's just not very good. You're not going to have a lot of job creation when you don't have any immigration. And there are 4+ million baby boomers that are retiring. They're turning 65 and retiring every year. They have been for a few years, and they will be for the next few years. And so if you don't bring in immigrants, you're not going to have much of a labor force increase, or in your job creation will be weak. And Carl will talk to you about the government jobs.
One of the things that we won't be hearing about if we don't get the federal numbers is what's happening with government employment. And government employment with the start of the fiscal year, we've got over 150,000 employees that had been on the payrolls, but are now not going to be on the payrolls starting with October. And so that's a problem, because that will look even worse for the jobs for this year. Okay, the unemployment rate, again, we don't know what it is. It was 4.3% in August. It's probably going up, but we just don't know. We now have and this is guesstimates of where the unemployment rate was in September, probabilities anywhere from 4% to 4.6%, with the consensus being somewhere in the 3 to 4.4% range. It looks like I may be able to connect my computer. It's making noises like that. So David, if you want to take the next couple of slides, I'm going to mute myself and try and connect my computer.
Yeah, let me know when you're ready. So the Congressional Budget Office is not shut down. It's still reporting. And we got the fiscal year budget numbers for the year. This is Treasury will make it official, but CBO is generally, 99% accurate with this sort of, their best estimate month. Remember, the fiscal year goes October to September. So the fiscal year is complete. The budget deficit was basically the same as last year in dollar terms. The receipts or the revenue was up about 300 billion, and the outlays were down about 300 billion. The tariffs were 118 billion up versus last year, and so that's almost half of the increase in the receipts was from tariffs. Tariffs doubled basically, up 153%. So 1.5 times. The net interest was over $1 trillion, which is an unusually large number. That's a record. And then also spending was over 7 trillion for the first time ever for a fiscal year. So let's take a look at some others here. Now, why did the budget deficit stay the same? Kind of so here was the deficit in 2024 was 1.8 trillion. That's 1,817 billion. So if you just put a dot where you would put the comma, that'll give you the trillions. And the taxes were actually, this green means it improved the situation. The more tax revenue lowered the deficit. So the deficit here is shown as a positive, not as a negative. So when the revenue comes in, that's going to lower the deficit. And so the individual and payroll taxes were very strong. But corporate taxes fell by $70 billion. Shocking that would happen under a Republican administration. So that added to the deficit. And the tariffs were the 118 I mentioned, so that helped with extra revenue coming in. These are typical where Social Security, Medicare, and Medicaid, as the country ages, as we get Social Security COLAs for inflation, these numbers are going to go up, and they're the main driver of the budget deficit typically. And then education spend was actually an unusual item in here. And by spending is kind of complicated. It's not as easy as it would seem. What happened is the Trump administration is not as generous about student loan forgiveness as the Biden administration was. And so you've got about $234 billion more money coming in than would have come in under Biden and under Biden's policies. And the way the CBO scores this is it isn't just 1 year. They score what's called a present value. They analyze all those amounts of extra revenue that are going to come in over the next 10 or however many years, and they create one figure out of it. So when Biden proposed the student loan forgiveness a couple of years ago, they scored that as $400 billion in additional cost. And here, this is going the other way, $234 billion in sort of additional revenue, although it's just expected revenue over time. This is how the CBO by law has to score it. But it helped make the deficit look smaller. And then the various other departments are over here, Defense and Homeland Security, and then other spend on the other major departments. So all of them, law enforcement and all of that is in here. And the net effect, though, was almost nothing. They sort of all canceled each other out. And the budget deficit was the same, roughly in dollar terms. And then relative to the size of the economy, it was actually a little bit smaller. And so this was, the deficit didn't get worse. It stayed pretty much the same on a slightly larger economy, which is from a deficit standpoint is pretty good news. If you look at the deficits as a percent of GDP, so relative to the size of the economy, it ended fiscal year 2024 at about 6.4%. This is a Fred chart. I got to get the latest number, the official number for 2025, but it's probably going to be a little bit lower. So 6.3, 6.2, somewhere in there. If you're trying to do math in your mind, like percent of GDP is difficult. Each percent of GDP is about $300 billion. If you like the dollars, you like those numbers. So 6% of GDP is where you get to around 1,800 billion. It's very unusual to have a deficit this high when the economy is this strong. You would expect to see a recession. And so part of this is the very large amount of interest, the $1 trillion interest that we had. And then the other factors that I mentioned in here, but typically we'll get into this as we go in through some other slides. This is sort of if you can't get interest rates down towards zero and then refinance all of that government debt, you're going to have very large deficit and debt balances for the foreseeable future, along with the aging country, the increases in the Medicare, Medicaid. And then if we keep cutting taxes, then we're not going to be able to keep up with that. And these deficits are expected to get very large. This is just a history. If you were looking at the deficits going back to even before World War II, this is in dollars. So I just multiplied the percent of GDP by 300 so you can kind of see it. And took about an $8 trillion deficit to fund World War II, and just in 1943 alone, just to give you kind of a scale of the deficits. Right now, they're about $2 trillion. So we're not fighting the World War II, but they got to about $4 trillion when we were in the depths of the pandemic. So these are just give you some idea of how big the deficits are in sort of historical perspective. And if you were to draw a trend line through this, after about 2000 or so, when we had the Clinton balanced budgets for a few years, the trend line has been down, been fluctuating with the recessions, but the deficit is getting much larger. I mean, it's getting more negative. It's going down. The deficit is not getting smaller. It's getting more negative on this scale. So you kind of see that trend, and it's going to keep going like that as the country ages, as we pay a lot for interest, barring some gigantic changes in tax policy. We're going to likely see this because we're not likely to cut Medicare and Social Security. Carl, are you back? Are you ready, or should I keep going?
I'm back, but my computer's questioning whether I'm back.
Do you want to do this one, or are you good, or you want me to keep going?
Hang on a second.
Okay.
Well, all right, I'll do this one.
All right.
Again, if you look at this, what this is showing is that the deficit under Trump is expected to go up based upon the Trump Reconciliation Act. Although we're only showing tariff revenue for 2024 and 2025, there's disputes in the court as to whether or not the tariffs will still be in place in future years and what those will look like. And certainly under the next administration, we may not see tariffs at the same level. We may have more free traders. So if we get to the 10-year budget forecast from the CBO, we see that what the baseline Trump inherited is the blue line, at least it's blue on my computer, and the orange line is the Post-Reconciliation Act excluding tariffs. So we see it's higher under the Trump Post-Reconciliation Act. And outlays are going up, government spending is going up, and revenues are going up as well. And spending is exceeding revenues in every year, has historically and will going forward. And the main spending drivers, the aging population, Social Security, Medicare, senior citizen Medicaid, all of which are going to be driving spending up in future years. This is something, it's demographics, it's something that should have been planned for and probably wasn't planned for as well as we wanted to. I know that Obama and Speaker Boehner attempted to address these programs back about 2011, but they couldn't get support from their parties. And so they just pushed it forward and punted it. So what we end up with is trust funds that are probably going to be exhausted in 2032, 2034, somewhere in that range. Doesn't mean the programs will stop. It just means that Social Security will take about a 24% haircut on your Social Security if there aren't any changes made between now and then. And this is where we look at the what's happening with the programs, and we get the aging of the population as well as cost growth. And the major healthcare programs, Medicare is the big one that's going up. Medicaid, CHIP, premium tax credits, and related spending are not going to go up as much as a percentage of GDP, but as GDP goes up, they'll go up. Demographics, the number of people under 24 has peaked, assuming we don't change immigration policy. And so we have an aging population. And if we're going to have more people working, people 65 and older may have to work more, as well as other age groups might have to work more. Or we can just get more immigrants. So what we have here is population growth contributing factors. And what we see is that population growth is declining, births minus deaths. And if we have net immigration, we can balance that out. If we don't have net immigration, we're going to be hurting. And so this was the net immigration in the CBO's January forecast and their September projection. And we see is that immigration in the January was higher than what has happened since then. But going forward, they're projecting that we'll have relatively stable. Okay, average annual growth of real potential GDP and its components. And this is labor force productivity and growth in the labor force. And historically, we've had decent growth in the labor force and decent growth in labor force productivity. What we're projecting is that productivity will go down and the labor force will grow, especially in the later years, very little as with that aging population, especially if we don't have much in the way of immigration. So this was, again, the CBO forecast in March, and suggesting that although we've had average 2.5% growth between 1995 and 2020, it was saying in the next 10 years, 1.8%, then 1.6%, then 1.4%. So overall, for the next 30 years, a 1.6% real GDP growth, which is much lower than historical, and it will not help us get the deficit down or the debt down. Again, we see labor force growth is small. Anyhow, average interest rates, feeling is that they'll probably flatten out. So the days of the 2% mortgages are probably in the rearview mirror. On the other hand, my dad was really happy in 67 when he was able to get a 6% mortgage based on historical numbers. And I was really happy in 86 when I got a 10% mortgage, down from the high of 18% that Bill talks about back in the 81, 82 timeframe. So puts a little bit of historical perspective on these numbers. If mortgages are currently in the 6% range, it's not that high historically, but it's high compared to the last few years when a lot of us were able to refinance at 3% or less. And Treasury notes tend to influence the deficits. Okay, so we're going to let David talk about Democrats versus Republicans, although I like these slides too.
So yeah, Carl and I love to talk about this stuff. One of the carefully guarded secrets is that Democrats far outperform Republicans on all things economic in terms of the presidents. And it's very one-sided. People don't really realize this. They're always shocked when they see these numbers. But we'd like to do this once or twice a year to go through it. And since we didn't have all the BLS data, we cut that section down a bit. Normally, we really analyze the heck out of the labor market, and we get into these. We go into things like this more infrequently. But what this says is that the unemployment rate goes up under Republican presidents from the beginning to the end of their administrations, and that it tends to get better under Democrats. And this is the unemployment rate going up is really a good proxy for the economy, meaning if the unemployment rate's going up, the economy is getting worse. And if the unemployment rate is going down, then the economy is doing better. Democrats tend to be the rescue committee. I'll share a slide in a minute that says 10 of the last 11 recessions happened under Republican presidents. So we'll see. But in terms of the unemployment rate, start to end, Democrats vastly superior on this one. Same thing with the change in the budget deficit. As you would expect, when the economy gets worse, the budget deficit goes up, even if you don't change the laws, because, for example, you're paying more for unemployment. There are a lot more people that aren't working, and so the government's not collecting as much tax revenue. So the deficit gets bigger. There's more spending, what are called the automatic stabilizers, like unemployment insurance, those and disability, those jump, the revenue falls. And so it's not surprising to see, because of different things that have happened during those recessions, that the budget deficit jumps under Republicans and falls under Democrats. Typically, Kennedy cut taxes and had a slight increase in the deficit. But the big ones, Bush with the Great Recession, and then Trump with the pandemic, had big increases in the budget deficits there. So when people talk about the party of fiscal responsibility, even though Republicans like you to think that they're the best businessmen and they know how to run a tight budget and they're the spending cutters, the Democrats get much better budget results because we have much stronger economies. To a great extent, having a strong economy ordinarily is a very big part of keeping the deficit down.
Also, big tax cuts. Also, big tax cuts tend to increase the deficit.
That's right.
If you go back and look at that last slide, Bush 2 and Trump had big tax cuts.
That's right. That's right. And Clinton and Obama raised taxes only on the rich, only on the top 1 or 2%, and it helped them improve their deficit situations. Here's the slide on the 10 of the last 11 recessions started under Republicans. I don't know who created this slide, but I love it so much I share it all the time. I put it on social media often because the odds, and I need a better statistician. I've asked the AIs every now and then, what are the chances of flipping a coin and getting 10 out of 11 heads or tails? And the answer is about 5 out of 1,000 is what I saw lately. So it's not. It could be incredibly bad luck, 5 times out of 1,000, but probably not. There's something else that Republicans are doing that's not working very well, that's putting us into recession. And Trump is trying very hard right now to put us into recession. That's not typically the case, but he's doing a lot of things that are slowing the economy. basically the reduction in immigration is a huge one. And then the other one is the tariffs, and the obviously firing federal workers is smaller, but still a significant hit. So he's working hard to get a twofer here.
Well, I mean, he was the first one that had a drop in employment under his, 4-year administration, first one since Herbert Hoover. And the recent data indicates that at least for this year, he may be trying to duplicate that result.
So yeah, we'll see. It's pretty bad. Whatever he's going to we were talking about it earlier. I mean, the October numbers, that we missed the September numbers. The October numbers would come out for the jobs at the beginning of November. That's one where you're going to see this giant hit of 150,000 people that were getting severance pay and considered employed, federal employees that are now unemployed and are going to hit the jobs number. So there's going to be a very uphill climb for Trump to get even a zero in November. So I don't think he's in any hurry to undo the shutdown, as we'll talk about a little later. One of the really stark differences, and Carl mentioned a little bit about Trump being the only one to lose jobs. If you go back to the Cold War, since the Cold War, so 1989, you look at the two Bushes and Trump versus the last three Democrats. About 98% of the job creation was under the Democrats. And Trump's job creation was good before the pandemic. So if you want to make adjustments for that, you want to play games with the numbers and say, well, it's more fair if you only consider Trump up to the pandemic, and you only give Biden credit once the jobs had regained the pre-pandemic peak. And if you want to play that parlor game, you go right ahead, and the answer is going to be about 45-6. It's still a gigantic loss for the Republicans. It's a giant loss in the game, so to speak. 45-6 is not close. And if you do this, and I got the list at the bottom here, you take 9 million away from Biden, you give Trump 9 million, you give Obama 4, and you take 4 away from Bush 43. That's for 2009, because Obama came into office in 2009 when the economy was in free fall from the Great Recession. We were losing 700,000 jobs a month. We lost 4 million in 2009. So if you want to pretend that bad things didn't happen under Trump and handicap Biden, okay, that's not insane. But you also, if you're going to do that, you got to give Obama a break for 2009. That's on Bush. And that puts you into this 45-6 thing, no matter how you do it. The Democrats have a vastly superior jobs record. So whenever you see people say, how did Democrats regain the working class? Well, show them the chart. Talk to people about it. If you want jobs, you do it. It's under Democrats. If you want lower unemployment rate, it happens under Democrats.
Yeah, if you want a good economy, vote for Democrats. But right. we haven't managed to figure out how to convince voters to believe that, because the Republicans keep selling that they're better for the economy, even though the data says they're not.
And this is another version of the same chart. This was actually in The Economist. So it's one of my favorite sources to use. You got the source at the bottom of all these slides, but they did these charts, and they show, if you do the last 6 presidents, like we just showed before, it's like 50-1. If you do if you go back further to Carter, so the last 8 presidents, 4 Democrats, 4 Republicans, you'll get 60-17. Reagan had excellent job creation. So did Carter. Carter only for 1 term, Reagan for 2. And it's still, though, 60-17. It's still 3.5 times faster under Democrats.
Yeah.
The job creation.
Yeah. Average monthly job creation under Reagan was a good, I think, 168,000 a month, but it was a little better under Carter, I think 218,000 a month.
Yeah. And so this will surprise a lot of people too. The stock market does better under Democratic presidents. And it's not particularly close, actually. Now, this data was only through 2020, so this doesn't catch some of the Trump administration, but Biden also had a tremendous stock appreciation during his presidency. They were actually, I think, I'd have to check this, but I think Biden ended up slightly ahead of Trump. If you put him on sort of the racetrack, days in office, I think Biden ended up ahead. So it wouldn't change the result. The Democrats are going to be better off. And this is why when really rich people who really want their tax cuts badly, I wonder if they're actually coming out ahead, because they might be better off because they all tend to own a tremendous amount of stock. They might be better off with Democrats anyway, even with the tax cuts, but they won't believe that. So this is what Carl was mentioning earlier. I mean, the Republicans poll better on the economy. They poll better sometimes on crime when the results are much better under Democrats on crime. And then immigration is their preference. And a lot of Democrats sadly have this preference too, to block immigration or restrict immigration. And it just chokes the economy when you do that. So this is the polling. This is recent. I should have put the date on here, but it's in the last couple of months. The Republicans still poll better on the economy, immigration, and crime, even though, again, the Democrats, Biden had a much lower crime rate and also had a more intense police presence. There were more police per unit of population under Biden than Trump in his first term. All right, so let's pause there. Let's take questions. I have not been looking at the chat. So, do we have questions, Debbie, or others? Have you been?
Yeah, we do. We have some questions. If you would like me to read them now.
Yeah, do a few on as long as it's on the subjects we've talked about so far. Yep.
Yeah, good question, because I think some may not be. So we'll see what you think. George is asking, what does 150,000 government jobs look like as a percentage of all jobs?
All right. So good question. I will answer that question over the break with the precise number. I know where to get that data.
Roughly, there's about
Yeah.
150 million jobs,
Yeah.
160 million or whatever.
Yeah.
And so, it's a fraction of 1%. But if you look at it in terms of the average monthly job growth in a good year a good month being 150,000, having a hit of 150,000 government jobs is not going to be good.
Right. Right. And there are 3 million or so government jobs a hair under. So it's if 300,000 is 10% of that, this is basically a 5% cut in the government jobs, roughly. I did that math quickly on the back of my mental envelope. So we'll get you the exact numbers, though. We can grab that on the break. But those are pretty good estimates.
Okay, we have a question from Sita, and I don't know if this relates to what you are talking about, which may not, but I will ask it anyway. What about the bloated military budget and billionaires not paying up?
Yeah. So let me answer the second part first. The billionaires now. The estimates that I've seen, and it's been maybe 6 months since I looked at these numbers, are somewhere around 500 billion a year that the IRS doesn't collect from deadbeats. And the vast majority of that is from the rich, because they're the ones with all the money. And so if you were hiring more IRS agents as opposed to fewer, the incremental IRS agents tend to have a giant investment. It's like 6 to 1 or some crazy number. If you spend, $1 million on more IRS agents, you're going to get $6 million more in tax collections. They pay for themselves over and over again. It's a huge number. So in terms of billionaires directly, I can't give you that number exactly, but figure they're going to pay. The smart ones will borrow money and then live on that. They borrow against their portfolios, and then every now and then they will sell against their portfolio and pay capital gains. So they pay a tax rate maximum 20% on their capital gains to live. Most of us, if you're earning over 100,000, you're paying 25-30% on your, in your incremental tax rate. Your overall tax rate might be 25 or 30% that you're paying. So they live much cheaper in terms of taxes. And I think Warren Buffett said years ago we had a tax rate of like 8 or 9%. I mean, they figure other ways to really keep that number down. But I don't know an exact number for billionaires, but it's a significant amount that they avoid by this strategy of borrowing against their portfolio and then paying it off at the capital gains tax rate.
Well, you've got two things happening. Number one, you've got the big change in tax policy, offering tax cuts to the billionaires, so that even if they pay all the taxes that they would owe, they're paying at a lower rate. And then you've got what you talk about, the tax cheats in that class.
Yeah. We're not covering it today, but one thing that also always shocks people is the amount of money that the government doesn't collect because of deductions, exemptions, like this lower capital gains rate. That's called a preferential rate. But the deductions and exemptions are very much, they are skewed to the rich. And so about $1 trillion, let me see if I've got this number right, about $1 trillion a year in these what are called tax expenditures go to the top 20%. and like 300 or 400 billion of that goes to the top 1%. So even if you didn't mess with the tax rate tables at all, if you just eliminated these tax expenditures for the top 20% or so, in theory, you'd get somewhere close to $1 trillion. Now they may come up with other avoidance, but somewhere, let's say 800 billion to $1 trillion a year in additional revenue for the government just by eliminating the loopholes, so to speak. That's tax expenditure is the official name of these things. And you wouldn't even have to touch the bottom 80%, just the top 20% not getting these deals would basically make your deficit sustainable around $1 trillion for a very long time. $1 trillion deficit, by the way, is fine in the US government, as shocking as that number is. We're not going to get into it here, but if your trade deficit and your budget deficit are about the same, you're probably fine. You don't want to be balanced in your budget if you're running a large trade deficit. It drains your economy basically if you do that. So next question. Well, what was the first part of that one? That was the second part, the billionaires. What was the first part?
Oh, let me see. What about the military budget?
All right. Yeah, I mean, it still went up. I showed that slide a while back on the military, but it's not a huge increase. I mean, the military, all of these discretionary categories, there's a lot of money in there, but they're not the ones that are growing. They're not the ones that are driving that GDP number up. In fact, when you take the discretionary, meaning non-mandatory, so the mandatory is like Social Security, Medicare, Medicaid, all those things that if you are eligible, you will get paid for them. The government, they sort of run on autopilot. The government doesn't have to pass new legislation every year, so those are mandatory. The discretionary are things like the budgets for the different departments, and then defense is included in that. And defense and those other departments are actually falling as a share of GDP. So as much as there's room to cut, I'm sure we could cut defense spending. That isn't the real driver of the long-term issue that we have. And as you know, with defense, there's an enormous number of jobs that are associated with it. If you were to cut defense spending a lot, you would see job losses in those industries. And then, so you don't always get all the savings. If you cut defense spending by $100, you might get $80 of that savings or $60 of that. You're not going to get 100. But still, I mean, there's room. One of the ways Clinton balanced the budget is he basically froze. Well, defense spending actually fell a little bit, and then it came back, but it was pretty much flat through all the years of his administration. It didn't really change. And if we were to freeze defense spending for a decade, we would see some, it would certainly help with the budget deficit, but that isn't the main driver. It's the aging country. It's the increase in the cost per person from Social Security and the healthcare cost. Those are the big drivers along with interest. All right. Next question.
All right. Give me one moment. Kathy is asking, why aren't we spending the money we are using to arrest and deport immigrants to incent and train immigrants to stay?
Yeah. I mean, this country, I'm going to say it as I think is very racist, or if you want to use the word bigoted, that's another way to look at it. There is a very negative perception that immigrants are harmful to the U.S. economy, that they cost us money. And that couldn't be further from the truth. The CBO did a study on this, and I've shared slides on it before. We're probably due to share them again. But basically, and I might have them in here in the shutdown stakes, actually. But think of it as an immigrant would reduce the budget deficit about $1 trillion over a decade, about $100 billion a year because of all the extra tax revenue they pay into the federal government. And then also because you got, from the Biden surge alone, you've got 9 million estimated additional people here versus what you'd have otherwise. That number is 9 trillion more GDP, which works out to about 65,000 and more income and wealth per household over a decade. So a giant benefit. And the CBO also did the state and local impact of that in terms of what the state and local governments are paying. And that works out to only about a net of about 10 billion a year in more costs, because the numbers I gave you before are at the federal level. The state and local level, immigrants are also paying taxes there. So the way CBO did it, it was basically 20 billion more revenue coming in, 30 billion more expense at the state and local level. So it's like a minus 10 from immigrants, state and local. This drives a lot of bigots really crazy, even though the immigrants are this giant win for the country overall. I mean, 10 times as big a benefit as cost. They will swear on their deathbed till their deathbed that immigrants are harmful to the country. And Democrats didn't really fight that battle. We said we got into the argument about border security, who can secure the border better and how they're going to do it. And I think that was a horrible mistake. But I think I'm in the minority on that. Other people think that we should just be as tough on immigration as Republicans, and I think that just makes us look weak. I think people know that we're lying if we say that we're as tough on immigrants as Republicans, blah, blah, blah. Just let's be honest and explain that our economy is going to stink if we don't have a ton of immigrants in an aging country. And our taxes are going to be higher, other things equal, because of those higher deficits without immigrants. There's a whole list of evils that we have. And yeah, we're going to have the occasional criminal that does something terrible to somebody. But, a lot more of that crime's being committed by native born. The white people are killing other white people a lot more than immigrants are killing white people. We have to combat that racism. We don't have a voice like Martin Luther King anymore that's out there in the open saying this stuff, that you got to deal with this. And Democrats are kind of scared about this immigration issue. I've said it on many of these calls. I think that's why we lost the election, was that this was an immigration election. It was very clear that Trump was the high cost choice with the tariffs. If people voted on inflation and the economy, the facts are that the economy under Biden was fantastic, and that this idea that Trump would cut prices is ridiculous, especially with tariffs. And the media covered it honestly. They were very clear that Harris was the low cost choice, and people didn't care. And the only reason they didn't care, my theory, they're bigots. They voted their bigotry. They voted to get immigrants out or down, and that was a terrible mistake. It's kind of like the UK with Brexit. Terrible mistake for them. Next.
Okay, Dora.
I'll tell you what I really think next time. So.
Okay, Dora is asking, and I think this will be a simple one. How can I get the statement about Medicare and Social Security? Obama and the other gentleman's name happened in 2011. And who legislated for the rich to pay their fair share of the taxes?
Could you repeat that first part? I missed a piece of that.
Sure. Currently, Dora would like to know how she can get the statement about Medicare and Social Security. Obama and the other gentleman's name happened in 2011.
Basically,
okay.
back in 2011, Obama and Speaker Boehner were negotiating on a grand bargain to address the trust funds and push out the expiration of the trust funds. I've just put a couple of links in the chat for articles on that, but if you search on Boehner, Obama, trust funds, a number of articles pop up from that time period.
Was it the grand bargain? Is that the term, Carl?
Yeah, grand bargain was the term.
Yeah.
So there's a short Wikipedia article about that. I put a Boehner article about that.
Yep.
There was one from the Trump administration, but I haven't found it again.
Yep.
But I'll look for those during the break.
Yep. All right. So usually we take a break around 8 o'clock or so. Let's take a break until, what do you think, Carl, 8:10 or so?
Sounds good.
And we'll go through the shutdown and the household finances. We'll talk about the net worth statistics that came out. We'll look at the net worth statistics in the different groups and some of the interesting data that's been coming out around the rich being the ones that are doing all the spending and carrying the economy. We'll cover that in the household finances part. So I hope you guys stay, but we're going to take a nice break here for 10 minutes or so, and we'll see you at 8:10.
Okay, David and Carl, just like to let you know, we have 2 more questions. I don't know if that will increase, but just to let you know.
Well, good. No, we'll get to them at the end of the session.
Okay, thank you.
Yep.
Break period. Just raise your digital hand, and we'll unmute you. It is good to see a number of folks that have been following these calls for years, and it's good to see brand new people. These names that are popping up here. We'll send out a survey at the end of this Zoom, and we'd love to know what your thoughts are. People were asking if this was recorded. Yes, it is recorded. It's being recorded live right now. Every ooh and ah and oops, everything is recorded, and it's to be available immediately at the end of this call. It's on the NWSOFA.org website.
And we've also been posting, or will continue to post, a link to the PowerPoint presentation.
Yes, yes. And Carl, when I do the Substacks now, I not only put in the summaries, the video, and the PowerPoints, so that you
Great.
can pick up all these slides and use the ones that you want to send to your friends and make them really happy.
You can take those to your Tuesday meetings out in. Good news, gas prices have actually come down a little bit. They're now right about $3 a gallon nationwide, which is about actually a little bit below what it was when Trump was elected and when Trump took office. We had been about 10 cents a gallon higher than those numbers, what Trump inherited, up until the last 2 weeks. But gas prices have come down substantially in the last 2 weeks. So, and let me post a link to those numbers.
Do you happen to know, Carl, talking about gas prices and reserves, whether we refilled our strategic reserve?
I don't know that. I know that the price of crude oil has come down substantially. So it would be a really good time to do that.
I really think David hit the nail on the head when he was talking about immigrants and jobs and their contribution to the economy. The fact that we got lost into talking about border security and couldn't engage or didn't engage on what the positive results are of the immigrants that were coming into our country.
And it is proven too how much they do contribute, and they don't reap the benefit thereof, but yet the bigotry prevailed.
Right.
It's just an AI estimate. I would have to confirm it, but my friend, the AI co-pilot, is saying our strategic reserve is about 60% full right now. 408 million barrels is in there, and the maximum capacity is 714 million.
It's a fun number. I really don't know how to analyze it. Would that
That's a
would
big
that keep,
swimming pool. That's a very big swimming pool.
would that keep all of us driving for a week or a month or a year?
Some people are really good at explaining, like, deficits would be dollar bills stacked to the moon or whatever. I mean, I don't know how to explain that many gallons or barrels. So I'll have to think about what that is. I don't have to do some math. Let's see. Let me ask it for a historical. I'm going to ask it for an analogy of how much that stuff is.
Well, that should help keep the inflation rate down, though, if gasoline and the derivatives of gasoline or oil is going down, as Carl was just mentioning. If there's anybody that wants to ask a question of David and Carl as the break continues here, just raise your digital hand. You find that down underneath the heart-shaped icon. I see Lillian from Quincy just raised her hand.
There we go. You asked for it. Now you got it.
I did.
Go.
Okay, thank you. I heard you say that defense spending is not the biggest reason for the deficit, but I wasn't sure what you said are the two biggest reasons. Was it the aging population and what else?
I mean, and the rate of increase in spending.
Oh.
And so it's the COLA that goes on the Social Security, or the increase in healthcare spending per person. It's the not just the number of people that are going into those programs, but the amount that we're spending on each person. And then the interest is what is driving the deficit going forward.
Is that kind of scary to think of us old people?
It's a lot of old people. I mean, I think we just need to raise taxes on rich people. And I'll talk about that in the thing. I mean, they got plenty of money.
Yeah.
And then I'll show you the slide on that. The top 10% have $113 trillion in net worth. That's net worth. So that's after their liabilities. That's assets minus liabilities. 113 trillion. That is plenty to, if we tax them, let's be honest, a nice round number of $1 trillion a year. If we got out of that pool, we'd be fine. Our budget deficit would not be scary. It's just, how do you get that money? And Republicans will never allow it. You'll need a supermajority of Democrats. Even a lot of centrist Democrats won't allow it. You're going to need a government filled with AOCs and to get that. And until, because what will happen eventually is if the deficit continues to spiral and get gigantic, then you're going to see inflation, you're going to see interest rates going up quite a bit, and then people will start to feel the pain of a large deficit, and that's when they will agree. Hopefully the bottom 99% or the bottom 90 will say, okay, guys, time to pay up. But we may have to suffer for a while before that happens.
So we have Larry with a hand up also. Larry, do you have a comment?
Yeah, I apologize for not hearing everything correctly, but did they say, are we using crude from the National Reserve to bring
No.
prices down?
Not currently, no.
No.
This hasn't been replaced from before?
Right.
I'm not sure if it has or has not.
Okay.
I know that the price of crude oil is down substantially. So it would be a good time to replace the reserves, but versus we, sell high, buy low. That'll old.
Yeah. No, I noticed the gas price here has been fluctuating 30, 40, 50 cents a gallon. You can't time it, but it is. And I just assumed it was because so many people out of work or laid off and they had a glut of gas or crude or whatever.
Yeah, I don't know. I know that heck, I get a dollar variation in the geography of commuting from the lakefront when I went out to the pizza night, because the local station's here at $3.99 for a gallon of regular, and I actually got, I think, $2.87 or something at the Gulf just south of Moretti's.
I just added a chart, and again, this is from the AI. I did it really fast, so I wouldn't hold your hat, hang your hat on this. We'd have to look at it in more detail. But the last 10 years of the inventory, it looks like until about the pandemic, we were north of 600 million barrels in there. And then lately it's about 400 million. It fell during the Biden era, got down to 350 million barrels. We were releasing a lot of that to keep prices down. It looks in 2021, 2022, 2023. And then we started rebuilding in 24. Once that inflation had sort of been behind us. So it goes from 700 all the way down to 350. So basically cut in half, more or less. And then it's on its way back, but we're still well below where we were, in the pre-Biden era.
Yeah.
Tamara has her hand up and a couple more, but let's take Tamara's question and then get back to the presentation, and then we'll pick up on on Brooke and somebody else that just lowered their hands. Go ahead, Tamara.
Yep. Thanks, Bill. Thanks, gentlemen, for a great presentation. I had a conflict this evening, so I came in kind of late. But just a couple comments and then one question. One is for those people living right around the southern tip of Lake Michigan, in Wisconsin, Michigan, Indiana, and Illinois. I did put it in the chat. There was a BP refinery breach again over the weekend, and it's resulted in probably a 30 to 60 cent per gallon differential since late Sunday night. And that's the actual was in the area of the refinery where they take the crude and convert it to gasoline. So it's been widely publicized. So for those of you in the Midwest, seeing some kind of surprise today or maybe even yesterday evening, that's one of the factors. And they're trying to make the repairs and restore their operations. And it's been a pretty tenuous situation with that refinery because they've had a couple of other issues in the last, I'd say, 14 to 16 months. Right. But, that being said, I I didn't have a chance to see a lot of the slides, and I didn't know, David, if you or the other gentleman had focused on any of the regional areas of the country that rely on the federal workforce in terms of spending dollars. Maybe you have already, but
No, we have not. That's a
okay.
good question. We'll look into that. Let me take that as a note for next time.
Yeah, because I can tell you right now in the DMV, which is District Maryland, Virginia, those businesses and other service side of things are starting to really feel the pinch as regular, I should say, federal workers under the GS system. Many have been put on furlough or unpaid leave, but then you have over 20,000 Capitol Hill employees not being paid. And so there's a lot of economic strife taking place. I just be interesting to see from the 5 to 6 regions where you have the concentration of the largest number of federal employees, what maybe that, if there's data available, David, what that might look like.
No, we'll take a look. No, there probably is. Thank you.
Sure.
That's a good question. All right, we're going to talk about the stakes in the shutdown and some of the economics that go with that. So at a high level, if you're looking for something to share on social media that talks about the stakes of the shutdown, that's why I put this together. There's Republicans cut $1 trillion from Medicaid over a decade. That's from their big, beautiful bill or the Reconciliation Act. And they have not extended certain ACA subsidies. And I'll get into details on that in a minute. But that really affects about 20 million or more families. And it would basically double the amount that they're paying even after the subsidy. So if they're paying $300, then they're going to be paying $600 more. Or they were paying $300, now they're going to be paying $600. It's a much bigger jump in cost. So CBO estimates about 3 million also could lose their health insurance from that, and there's 13 million at risk from the Medicaid cuts. And so you're looking at 16 million people, and the Affordable Care Act probably helped expand healthcare coverage by about 23 to 25 million. So you're looking at almost 2/3 of the benefit of the ACA being blocked by these two things that the Republicans did. Or, well, if they don't extend the ACA subsidies, that's another part of it. That's the second part. But the act that they passed, plus not extending the ACA subsidies, if they were to do both of those things, you're undoing about 2/3 of the Affordable Care Act. And then in general, just protesting the fact that we've got a pretty lawless regime right now is another more general. You can throw in whatever other issues you have with the government. But economically, you've got the first two. Are major things, and that's the push that the Democrats have been doing, because healthcare is an issue that we do tend to win on, and so it's a really good platform for us to use to fight this situation.
Well, this year's shutdown, I think, is primarily the second of these, because that's the one that kicks in at the January 1st of next year, with really people are going to start seeing the higher premiums on November 1st when they get their new health insurance bills, where the cuts to Medicaid are more 2026 cuts, not 2025.
Right. That's right. They spread out over a decade. These estimates are from the Congressional Budget Office over a decade.
So the current fight is really over the ACA subsidies.
That's right. That's right. All right. We know that the economic news is not, certain amounts of economic news are not getting reported, the BEA and the BLS, so that you're seeing notices like this on their boards when you go look. There was a question earlier about defense spending and its effect on the budget. So this graphic actually gives you a sense of the size of these things. It's from Wells Fargo using CBO data, but what they're trying to explain here is that there's mandatory, there's discretionary, there's net interest. Where the thing hits is in this discretionary, where a shutdown hits is in the discretionary category, which is the non-defense, which is a lot of the government bureaus, so the departments, and then the Defense Department as well, which is about 850 billion here. And this 850 is out of about 7 trillion that the government spent last year. So just to give you a sense of how big it is. And if you add in the Veterans Administration, you add in some of the Homeland Security stuff, then defense gets over $1 trillion. Then you're pulling in some of the numbers that are over here under the defense umbrella. So just, this is a narrow, like a DOD definition, Department of Defense definition of how much we spend on defense. If you use a wider definition, that's where you'll see numbers that are like in the low trillions. So not, Social Security and Medicare are not blocked by the government shutdown. There also are a lot of categories in here, like essential and non-essential. They make a distinction between the two, so they might shut down the museums, but they don't stop. Defense people can't just take a holiday. They might not get paid, but they're not going to get a holiday. And then back pay historically has been paid, although I've heard Trump has taken some steps to block that. So we'll see. But typically the back pay happens. And this is a weird shutdown. The last few you've had to deal with were because of the shutdown. They were debates about spending or other things. This one doesn't involve the debt ceiling. That's kind of atypical. And I didn't explain it very well, so I'll try to explain it again here with the amount of money we're talking about with those ACA subsidies. If you look in the average premium would go from $460 to $1,087. It's a 600 increase. I botched that before. I'm sorry. It's a 600 increase from like $460-ish to $1,087. That's the average. So right now, as you know, people get subsidies so that the cost before the subsidy can be very high, but after the subsidy, the real cost they pay is low. And these numbers would jump dramatically. I should not have a dollar sign there. It's 136% increase. And so these are quotes from the actual Urban Institute study. What it shows here is where people are on the federal, relative to the federal poverty line, and how much they are paying now. That's the blue. And how much they'd be paying is in the gold if those premium tax credits, the subsidies, expire. And so poorer folks down here, they might actually pay nothing. If you're 150% of the poverty line or below, you pay nothing. Now you would pay $400 if those subsidies expire, and on up here. And so the average is somewhere in this range right here. And the question would be, well, what's the federal poverty line? That depends on how many people are in the family. It's in the footnote, which is probably hard for you guys to see. The federal poverty line is $15,060 for an individual and $31,200 for a family of four. 400% of FBL is $60,240 for an individual and $124,100 for a family of four. I don't know that there are very many people greater than that. And I don't know, maybe Carl can help me here. I mean, aren't you not allowed to get subsidies at all beyond a certain point? I mean, I was surprised to see the greater than 400.
It used to be that there was a cliff on subsidies for individuals that was slightly under 50,000. Now, with the enhanced subsidies, the subsidies phased out, and so what you had was higher subsidies for lower income people, and the subsidies go to zero. So the 120,000 income, you might still be receiving a slight subsidy on that last 5 or 10,000 in income, but not much of one.
And there's
Question for David.
Yeah, let me just say this. There's somewhere around 20 million people that are affected by this, maybe a little bit over, like 21, somewhere in that low 20s, that are somewhere on this scale that I'm showing you here. Now, go ahead.
Yeah, the question is, are these per person or per family?
Good question. This has got to be per family. This is a household. Let me see. It's in here. No, I think it's household premiums.
Okay, thank you.
I would say household. Yeah, this seems, but I don't know.
Well, remember, there's a lot of one-person households too.
All right, that's fair. Yeah, I'm not sure. I mean,
which is why they've got the family of four versus the family of one.
Yeah, I mean, usually people talk about households when they do this stuff. So they usually don't talk about it they talk about individual and family. So these are probably household averages, but I'll put something in the chat about that. I can check that real quick. So this takes a little bit to absorb here, but this is the number of people that would be affected. Like we've got about 25 million that are uninsured, somewhere in there. And if this law goes into effect, which it will, unless it's reversed, the Medicaid impact that I talked about earlier, and then the subsidies, you're looking at that 25 million going up toward 40 million uninsured, if that were all allowed to go through, if Democrats don't prevail in this shutdown. And the reason it's very complicated why the Medicaid piece affects all the number of people that it does. And the CBO does a ton of analysis and modeling on this to come up with it. But here are the breakdowns and the number of people that are affected, healthcare spending cuts by provision. The work requirements will cause 26% of those Medicaid related people. By making it harder to qualify, you will have people that don't go through all the hoops and they go uninsured. And so that's what work requirements generally does. It's not that these people are deadbeats, it's that they don't know how to get the benefits that they're entitled to, and they just go uninsured. So there's certain estimates, historical, based on that. And so this is the breakdown of kind of the 100% of this gap here. Where's that coming from? That's what this chart over here is trying to show. What he's saying is, as a result, more than 20 million Americans face higher insurance premiums next year, and almost 14 million could lose their health insurance altogether over the next decade. That's more than 70% of those who gained coverage since Obamacare went into effect. So this is sort of it was not publicized in the news. Nobody was analyzing this back then. That's one benefit out of this shutdown, is everybody's talking about healthcare now. They basically repealed 70% of Obamacare without really saying it. Nobody really knew that. I didn't know it. And I'm pretty on top of these things. That connection was never made in my brain. I didn't hear the Democratic leadership talking about it, but I could have missed it. But it wasn't saturation coverage, and this really brings it home. 70% of the ACA undone by letting the subsidies expire and the Medicaid hits in the bill.
A lot of that may depend upon how well the states go ahead, because Medicaid is a state program. The states have to go ahead and evaluate whether or not people are meeting the requirements for work requirements, et cetera, et cetera. And I think some states like Illinois, which support Medicaid, will probably have lots of help at the state level to help people complete that paperwork, where some states, red states, will not have that sort of help.
Right. That's a good point. Yeah, I wouldn't trust Trump and the Republicans to work hard to help the ACA cover people or Medicaid cover people. Just another chart. Again, this one's a little bit complicated too. There's a subsidy cliff. Here's the enhanced tax credit, the benefits that it gave. And it limited how much you were paying to a certain percent of your income, somewhere like 8%, I think, or under 10. And now if you let that go, it jumps up a lot. And it phases out with the higher income. So instead of getting a much reduced level with this enhanced tax credit, if it goes away, you're more on this line up here. And here's the number of people that are enrolled by income level. So the vast majority are the ones down at the bottom, earning up to 250 of the poverty level. You've got some between 250 and 400, and then above 400. But it's mostly under 250. And so if we look back here, we're looking at these last three, or the leftmost three groups here. So these are significant hits for those people, those families. So part of this is trying to explain now how much are these premiums going to go up, because it is not uniform. It's going to vary significantly by state, with different regulators, different numbers of providers that are involved, different levels of demand and supply in each state. So you see this, that's what these dots are trying to represent, is different plans and how much of the premiums are going up. Because part of this is, as you lose people, tend to lose the healthier people. Like young people may roll the dice, whereas an older person, if they can afford it, is going to do everything they can to get health coverage. So this is different policies. Some of them are not going up very much, and some of them are going up a ton. Here are some of the benchmark payments, annual payments for the Obamacare plan for the average 55-year-old couple making $85,000. They would be paying $72.25 now, and they'll be paying another $13 if that's how much they get in the premium tax credit. That would go away, and they would be paying that full amount plus these extra premiums that are coming from this over here. So if you're paying $7,000 now, you could be paying $25,000 next year. That's a lot of money. That is an awful lot of money for a 55-year-old couple. We don't want that to happen. And so you got to get the word out. Make people know it. And the Democrats have been doing a surprisingly good job, I think, of staying unified and on message about the shutdown and why we're doing it. So, of course, what Republicans are doing is they're pressing the bigot button, right? They're saying bigot, they're going to talk about this as about being Democrats giving care to immigrants. That's what they've been repeating over and over again because they know that gets people riled up, and that has been how they've been winning. And so it's useful to see this evidence when they start pressing, I call it pressing the bigot button every time they want to get their base going, or even some Democrats going, they use immigrants. Well, it turns out that the way Medicaid, you can't just apply for Medicaid as an undocumented in most cases. There are some states that have unusual programs that allow this, but for the most part, Medicaid at the federal level, the only way people get the benefit is if you have an emergency. If you're an undocumented immigrant, you go in the hospital because you broke your leg at work, they will, of course, no matter where you break it, they will take care of it, and then they will bill Medicaid. It's a tiny amount of the Medicaid spend. Most immigrants are healthy, they're fine. They get injured on the job, making us all richer and lowering our budget deficit, and this is the tiny investment that we make to help pay for them. And this is part of that CBO analysis. So this is a tiny
this
amount.
program was a Reagan era program.
Yeah. I mean,
Reagan signed this into law.
Yeah, he's not Reagan was definitely more pro-immigrant than this crew. He was not that wasn't his issue. So again, 0.4 of the entire Medicaid spending in 2023 was emergency Medicaid spending. And a bunch of that was for undocumented immigrants. 0.4. A bunch of that 0.4 was undocumented immigrants. It's a tiny fraction of the spend. Now, I talked about some of this earlier. So this is the impact of just the Biden immigration surge, which was about 9 million people over 5 or 6 years estimated. This is what they're saying here basically is the cost over a decade is about 20 million. But you also have revenue going up. Sorry, here's the cost side, 28 billion. Let's use the top number, and 18 billion on additional revenue. So about a 10 million gap. Whether you look at the blue or the total, it's about 10 million either way. So let's call it 100 billion over a decade, all right? This is a summary of the CBO study at the federal level. So 9 trillion higher GDP, 65,000 more income per household. That's what 9 trillion divided by about 132 million households is. 1 trillion reduction in deficits because you got all this extra tax revenue coming in from all those people. You got 9 million more customers for U.S. businesses. Their spending is our income. That's how an economy works. Your spending is my income. My spending is your income. And then you got a lot of not anecdotes, but a lot of the big tech startups have immigrant founders, and you've got 4 million boomers that are retiring every year, approximately. And how do you keep your economy growing if you just don't fill that hole with immigrants? So part of the lies you typically hear that immigrants, there's like 20 or 30 or 40 million undocumented in the U.S., some ridiculous number. One of the best sources for this is the Pew Center. By 2023, they were estimating we had about 14 million here. It had actually come down over the past since like the peak before the Great Recession. We had that long boom period and the housing boom. There were more undocumented here. And then when that recession hit, people went away. And then it's been climbing. And that 14 million number, they say they don't know exactly what the number was for 2024, but they figure it's a little bit higher than that. Maybe it's 15, maybe it's 16. And what percent of those immigrants are here legally or have some legal protection? About 43% of them, about 6 million of those, they're not just undocumented, they're undocumented, but they have a legal basis for being here. They have the papers, so to speak, or they're in the asylum program waiting for their hearing. So they're not just like all jumping over the fence. They came here, they turned themselves in at the border, and they got in line they claimed asylum and they got in line. Now, we were a lot more lenient about that under Biden, and then late in the Biden administration, he stopped being so lenient. And now under Trump, he's not lenient at all. So, but these are the different buckets of why people are in this orange section: asylum, parole, crime or violence victims. I mean, various ways that people qualify to be here legally. 43% of them are. A lot of people think they're all, completely illegal lawbreakers, jump the fence. No. About 40% did the right thing. So that's just a little bit of background on the immigration issue. You're going to hear Republicans pressing that button a lot because they figure that that's going to get there. That's how they won, in my view, as I said earlier. And I stick with that because you see it all the time when you're watching for it, is they're constantly pressing the bigot button. So let me pause there. Any questions on that section? I see a hand raised. Anybody want to ask a couple questions before we do the household finances?
Let's call on Brooke. If she wants to
Well-
unmute.
Let's see what Brooke has.
Brooke and then Susan.
Yeah, I wanted to go back to what you were saying earlier about the fuel prices lowering. And understandably, the present regime is taking a lot of credit for that. Is that credit really due? And did they really do anything to actually facilitate those fuel prices going lower?
Well, if I posted a link that gives weekly fuel prices for the last, I don't know, 30 years or something, what you see is that fuel prices from when Trump came into office basically had gone up a little bit, had not gone down until very, very recently.
Yep.
And I don't know what would cause the prices to have come down substantially in
The
the
only
last
thing I can
couple
think of is people expecting that the economy is going to slow. That would lower gas prices.
Well, yeah, I
Expectation
mean,
of a recession will lower gas prices.
Well,
no
people
doubt.
who aren't getting paid and aren't taking road trips.
That's true too. Yep. There's less demand. That's right. But yeah, I mean, when I looked at it, I didn't share it. I'll see if it's in there. I don't think it's in this one, but every month I look at the January versus the current month to see if prices have gone up or down, and they were up. As between January to August, gas prices had gone up a small amount, like 1 or 2%. All right, Susan, we have a hand up from Susan Melnick.
Yes, go ahead, Susan.
Okay, yes. I want to make sure I understood what you were saying about the insurance costs. Were you saying that the typical 60-year-old household would be paying an extra $7,000 per year if the current plan stays in place after January?
Oh, a lot more than that. So the average 55-year-old couple making $85,000, that's close to the median household income. Right
Okay.
now, they're paying $72.25 because they've got this giant tax credit that they're getting.
Okay.
So the premium would before tax credit was 20 grand, but they only pay $72.25 because they're getting 13,000 premium tax credit. That's going to go away. And so what they would be getting is they have to pay 20,000, almost 21,000 for the premium. And then because of this, the premium increases from this year to next. That's another 3,700 on top of that. So they're going from 7,000 to 24,000.
Okay, so it will cost them, that household, an extra $17,000 or so
Right.
every year if the current plan stays in place, as
That's
starting
right.
January 1st. So
That's right.
that's a good selling point. If you see your friends, hey, do you want to buy me a car for $17,000, or do you want to pay that in your insurance, or do you want to get these legislators in line and tell them you don't want that plan?
Right. Totally. I know this is a great slide. This slide comes from, I always tell people to follow him because he does such a good job. This is the chart guy on MSNBC. This is from Stephen Ratner, Rattner. He worked in the Obama administration to help with the car, sort of the bankruptcy of the car companies and turning them around in the Great Recession. He was the car czar for that, and he does these great charts for MSNBC and then presents them. I steal them all the time for this presentation. I probably should have credited it on here somewhere, but he does. I usually do. He does. These are all his. These last few. They're crediting the New York Times here, so I didn't put him in, but there he is, Steve Ratner. These are Ratner's charts. I should have put that one over there. Yeah, that's the number, and the Democrats have been good about talking about this, but we got to keep doing it. We can't stop. Got to do repetition. And Schumer, actually, to his credit, at least once, he shared this slide. I think he shared this one and he shared this one. He didn't do this one because this one's hard even for me to understand. But he shared this slide, and he should do it every day. And so should all of our elected representatives. And we're just not used to doing that. We don't communicate that way. And that's where we need a marketing department that's flogging these people to make sure that happens. This is a great chart to share over and over and over again.
You need to share the right side of
Schumer did it. Actually, I fell off my chair when I saw Schumer did it. I was like, yes, All right.
Yeah, we need to talk to our friends and family about this. I mean, $17,000 a year. How much is the typical 55-year-old household paying in mortgage? You know, I mean,
Yeah.
does that basically effectively double their rent or mortgage? Who knows?
It's brutal. Yeah,
17,000 is a significant amount of money per year.
Oh, again,
Every
this is only the people that are on the ACA insurance exchanges, which is
20 million.
20 million people.
Right.
It,
No,
you know,
is it 20 million people or 20 million households? That's a different.
No, it's, well, households. Yeah, I mean, they're in a household, so it's going to be
Yeah.
affecting it. So
Right. But
But this
we have
does not
we say we have
include people that
130
have
million
employer
households in the U.S.
that's right. But only for the
So
20 that are getting the subsidies. Only 20 million households get the subsidies.
Okay, so 20 million out of 130 million. That's still like, you know,
Huge.
a huge percentage of us will be paying a very large amount extra
Yep.
starting January 1st.
Yeah.
So we need to be sharing that with our friends and family. I didn't realize that.
Yeah, it's
these
crazy.
numbers were
That's those subsidies are really helpful, and the idea that as you lose people from the pool, what tends to happen is the insurance companies then charge more. You know,
Yeah.
it's this vicious spiral of bad. And there's a reason the Affordable Care Act has been incredibly successful and is now very popular because of this. And we just need to make sure everybody knows it. And this chart also talks about how much it is. Now, most people don't speak in terms of FPL, so you'd have to put like dollar ranges on here, which is easy enough to do and share it. But this is where the Democrats don't have a central marketing group, as far as I know, that knows how to do this. And they really should. I mean, it's crazy that you don't see these charts like Carl and I just shared on the Democrats Better for the Economy. I mean, the last time the New York Times did it was like in 2021. They did an article on how much better the Democrats are. And it's like, well, why is it every 5 years we do that? I mean, Democrats should make sure we're op-editing that continuously. I mean, we are so far behind in sharing our economic story that, you know, I don't know. And I don't know. I don't think he's on today, but I'll give credit to Ed. And what's Ed's last name, Carl, our buddy Ed? What is
Spire?
it? Ed
Spire?
Spire, yes. Ed is very clear that if you want to persuade people that there is a burning platform that requires a very progressive, you know, large tax increases on the rich, paying for off the student loans, you know, all the progressive wish lists, telling people the economy's great is not helping. And I disagree with him, but he's got a good point, is that if you say everything's great, like it was under Biden, and we were saying in these sessions, it makes it harder to make the case, according to Ed, and he may have a point. So you have to be very careful about your messaging of Democrats outperform, but here are the things we want to do to help people that are left behind. We don't do that message well. And so what we've done is we sort of stayed away from the economic superiority message or how good the economy was under Biden, and we were afraid to say it. And that just catches us. That's why Republicans poll better. We got to break that, and we got the evidence is behind us. So I'll throw that out there because Ed would tell it if he were on and doing it.
Two comments on that. One, the chart that you just had up there, the other one, the one with the really ugly one on the left. The one on the right is very clear. No, the one you were just on. The one on the left does not speak without substantial explanation.
Right.
And I think you should just stick with the one on the right.
Yep, that's fair. Yep, I like that idea. Yep.
And then with regard, if we have a Democratic administration, I think saying that there's all these problems in the economy does not help reelect Democrats. If we have a Republican administration, saying there's problems in the economy should help elect Democrats.
Yeah.
So that was where we disagreed with Ed. Was Ed wanted the Democrats to talk about everything that was wrong when Kamala Harris was running, or when Hillary Clinton
was president. Yeah.
Yeah, when Hillary Clinton was running, it was to talk about what was wrong with the economy. Because economy wasn't perfect, but you don't help the Democrats by saying what's wrong with the economy after 4 or 8 years of Democratic president.
Yeah.
Okay, then we've got Susan Melnick as the next raised hand, and then there's
Ed is a U.S. Marine, so we want to make sure we don't annoy him too much with our comments. But yeah.
Okay. let me go on. And before I do, I would like to inquire, how is that going to affect people on fixed incomes?
How is what?
This insurance, how is that going to affect people on fixed incomes? That's
Well, if
really
you're
going to
talking
hurt.
about senior citizens, most of us are on Medicare,
Right,
Yeah.
which is a
Yeah.
whole different health economy.
right.
Oof,
Um,
terrible.
so I don't know how many people under age 65 are on a fixed income.
And if there's a few on disability that are getting their health care this way, then it would affect them.
Yeah.
But if they're on
But
disability, don't they qualify for Medicare anyhow?
I guess, well, I don't know that, but I guess you know. Okay, yeah,
Yeah. Depends
After
on
2
your
years on
age, I
disability.
believe.
yeah.
Yeah. Because when you turn 62, SSA makes you take retirement. So we're
Yep.
looking at that. But SG, is that Sarah by chance?
It is. Thank you. Hi,
All
this
right.
is Sarah. I'm in Texas. I'm in U.S. Congressional District 21. And we have a congressman that's been ranting a lot lately against the Democrats. And he says, one of the things he says is they're putting more money into the hands of the insurance companies. So what does that mean? And how do you argue that point?
Put money into the hands of the insurance companies.
Well, the
Yeah.
Democrats tried a couple of programs to take the insurance companies out of the whole health equation, and the Republicans fought it. The Republicans have always insisted that we need to keep the insurance companies in the mix, especially on Medicare with Medicare Advantage. They want to increase the amount to which insurance companies are in the mix.
Well, he seems to think it's a negative to give money. Why give money to the insurance company?
Well, if you make 20 million more uninsured or 15 million more uninsured, you definitely are taking money away from the from the health insurance companies. But that's not our best choice. That is not the way we want to do it. I'll have to look at the argument. I'll have to look up and understand what that is. You got me curious, but I don't think there's a good answer for it other than keep it simple. That is, you want to put a lot of people, you want to make things better for the insurance companies by putting 15 million people. Well, I don't know. I mean, I guess the way say it the other way that the Affordable Care Act is giving a lot more customers to insurance companies. It is,
Mhm.
everybody that's covered under the ACA
Yeah.
go up here, and so it is. It's not lying that all these people that are here are insurance company customers that will no longer be will not no longer be insured and will not be contributing to insurance companies. So but that's not the way you want to do it. You don't want to make 20 million people uninsured to take money away from insurance companies.
Mhm.
So he's full of it. I mean, but that's the
Yeah.
way to counter it is better to be paying them than having uninsured people.
Okay. Thank you.
Keep it simple that way. Yeah.
Okay. Thank you, Sarah.
Mark, Wendell,
Yes, we have Mark. Hello, Mark.
unmute and
There we go. We need to reactivate our healthcare insurance issue group, which we haven't done for a while. But a situation occurred with my daughter who just turned 30. She had to go get some care, and all the minute clinics have closed down, including Walgreens, which is a curious thing. I talked to Maggie Trevor, one of our Cook County commissioners who knows about healthcare, and she said some things. But my daughter got care through Endeavor, which took over Northwest Community Hospitals. She got an extra surcharge of several $100s on top of her insurance, which was covering it. So something is going on with the insurance industry and, of course, with healthcare. And I should file a complaint with the Illinois Department of Insurance with Ann Gillespie, our former state senator, is heading that up. But any comments about that? And are we seeing this kind of thing happening elsewhere?
well, I do know that there's been a lot of changes in terms of who the various providers are. I know that the present network is now split up between Prime and something else. And so you may have more out of network carriers that you may run into. A hospital that was in network may now be out of network, or at a particular hospital, a doctor might be out of network. And that might be what you're running into.
Yeah. I had a good experience with them recently. I just had to get some antibiotics for an upper respiratory infection that wouldn't go away. And my insurance covered it. There was no weird stuff in there. So,
Yeah. Well, the good news with standard Medicare is almost all I'm in network almost everywhere. If you Medicare Advantage, you run into these limited networks, and most private insurances have the limited networks. And so you can be out of network easily.
we'll take the question from Bill, and then we'll finish off the presentation, and then we'll open it up for any questions for people that want to stay after 9.
Sounds great.
Am I? Yes.
You are live, Bill.
So, yeah. So, Jim McGrath and I go down to a current events meeting. We call it the MAGA meeting because over the pandemic, they all turned MAGA. Not turned MAGA, but the liberals that stopped going. But anyhow, the subject of insurance came up last week with 3 or 4 of the ladies who are retired, fixed income, raising their hands and saying that their Medicare insurance, and I thought, wow, that was really strange. So I came home and I said to my wife, I said, we're on an Advantage plan. I said, thank God our insurance didn't double. And she said, it did. The new premiums just doubled. So the good news is when you're on an Advantage plan, you're not paying $350 or $400 per person per month. You're paying 50 or 60, but still that is so these are not, I don't think these are subsidy accounts. These are real life.
Yeah.
These are real life insurances. So this next week, when we go back in to do battle, I think it's this next week, maybe it's the week after that. I'm going to ask people, just kind of told people, what their insurances are, because these people were talking about their insurances going up like $350 to $700.
Wow.
And their copays adjusting differently also. So that's something for us to really watch out for.
Okay. Thank you.
I remember there was a woman at the pizza party on Tuesday last week. I think semi-volunteered to be a healthcare lead. We were trying to volunteer her.
Yes, she's a nurse, and she was very adept at saying she was just too busy.
Because Keith was good years ago, but has not been very active of late. But you're right that we're getting, especially with all the insurance stuff going on right now, we need to publicize this. And we can do it as part of this group, but it would be good to have it, as a separate issue as well.
Yeah, one thing, if you're interested, there is and I'll see if I can get the link in at the end here. Kaiser, if you're ever looking at a healthcare issue, if you put in Kaiser or KFF before you, it's the Kaiser Family Foundation. They do all these studies of healthcare. One of the ones that's great that they do is the employment market. And they show you what the premiums are for single people and families in the private market. So this is the employer market with 155 or million people or whatever are covered in there. They tell you the premiums that have gone up, and the premiums have actually come down. They haven't grown as fast since the ACA versus before the ACA. And now the premiums had already started coming down in the Bush years, but they stayed, the increases every year have been pretty tame compared to what they used to be like in the like around the 2000 or the 1990s. They are much lower, the increases. So the latest report was for 2024, and then the increases there were not large, but I don't know what's happened in 25 to 6 or 2025. So we'll see, but we'll bring that. I was looking at that a few weeks ago, so we got that information. I'll share that in a future meeting. All right, so we'll zip through this pretty quick and end this probably around 9 and change. So when people talk doom and gloom about the economy, I always show them this chart, which shows you how things have gone from the fourth quarter of 19, which was before the pandemic. People allegedly love 2019. Trump's reputation is built on, to some extent, on the economy is built on how awesome things were allegedly in 2019. Well, at the bottom of this chart, you see inflation has gone up about 24% cumulatively since then. So stuff that cost $1 back then costs $1.24 now. But look at all these other areas that have outgrown it. So the wages have outgrown inflation, and these are the wages of production workers. So this is the bottom 80% of workers. Their wages grew more than inflation. GDP has outgrown it, home prices, the net worth of the 50th to 90th group, the stock market, and the bottom 50% group net worth has also, all these things have far outgrown inflation. And so one of the things the Congressional Budget Office did is in 2023, they reported that you had more purchasing power in 2023 than 2019. Nobody believed that, and nobody covered it, but it was absolutely true because the wages outgrew it. And their study showed that it was the case across the entire income distribution, the bottom 20% all the way to the top 20%, because during the Biden years, the wages at the bottom grew faster than wages at the top. Here's the net worth on average across the economy. If you were to split the net worth of the United States evenly across those 132 million households, every household would be a millionaire. We'd all be 1.3 millionaires. Now, as you know, the average is not 1.26 million, or the average is 1.26. The median, so half above and half below, is more like 200,000. But this is just to give you a sense of how rich we are as a country. Every household a millionaire. Now, this is the 90th to 99th group. So this is the top 10% minus the top one. It's the 90th to 99th. And they're about 5 million net worth. So the top 10% average is about 5 million. And they've grown, but not enormously since before the pandemic, only up about 8% since before the pandemic. The 50th to 90th group, so the upper middle class, so to speak, is worth about $1 million. A little less, and they're up 23% versus before the pandemic. And this is real, by the way. This is adjusted for inflation. So that's how much they're up. And this is the bottom 50% group, which got pretty much wiped out during the Great Recession because of the housing market tanked, and people that were very leveraged in their homes got crushed. And that's been climbing back. So it got to 38 under Trump, and now it's at 64. In 2019, got a little higher than that toward the end of Trump, and now it's in that 60 plus range, about 63% above pre-pandemic per household. And that's, again, inflation adjusted. Now, how did people get richer? And so adjusted for inflation, but this is the bottom 50% group. What contributed to that change? So that group had 2.46 trillion in today's dollars back then, and now they've got 4.21 trillion. How did that happen? And so real estate, durable goods like cars, appliances, financial assets, and then pension values all went up. So on the asset side, all these things are green. And then mortgages people got a little more in depth. The bottom 50% only had 2.46 trillion out of the total 137. And then you see it again for the second quarter of 25. So we're up about $30 trillion over that time. But the bottom 50% only got 1.75 of that 30 trillion increase. So the percent increase, though, was good from 246 to 421. That was a 71% gain, but only got 6% of the increase. The 175 out of 30 is 6%. The share of net worth improved. So when people talk about did wealth inequality improve from before the pandemic, basically during the Biden years, yes, it did. The bottom 50% had 1.8% of the net worth, and now they've got 2.5% of it. Now, that is a tiny number compared to what these other groups have, but it got better. And you can see that the bottom 90% share went up, but this sort of 90th to 99th group, their share fell, but the top 0.1 went up. So sort of money transferred out of these two buckets to everybody else, so to speak, in terms of their share. Their share went. So that's how this table works. There's math explained here. It takes some work to get your mind around it, but this tells you kind of what's been happening over the last few years. I was saying earlier, this top 10% group has 113 trillion net worth. The national debt as of the second quarter was about 36 trillion. We're not going bankrupt as a country anytime soon. Do not panic over the national debt. And this side grows pretty fast. I mean, the stock market I showed you basically doubled since 2019. So there is a lot of wealth over there. It's concentrated. If you want to tax the rich, you don't need to tax everybody else. And in fact, you can't, because there's just not that much money in this group. There just isn't in the bottom 50%. There is not enough here, 4.2, to do anything about this. But it's here. This group's got 113. You know, these two squares here more than cover it. The personal savings rate has been falling under Trump. What that means is it can interpret it a couple different ways. People are either spending more on purpose, meaning they're just enjoying their buying stuff or services. They're rocking along and choosing not to save, or they are getting squeezed. There's some truth to that for different groups. We don't have this split out. Let me skip that for a minute of why, but what this shows is that the middle groups, the lower income and the middle income groups, those are the bottom 80%, are pretty much bumping along with inflation in terms of their spending. They're not buying more stuff. They are just really paying higher prices for the same stuff. They don't have more widgets in their home, but the rich people do. They've got more stuff, and they've been buying a lot more stuff or a lot more services over the years, over the past few years. But the bottom 80% aren't really feeling it. It's this upper 20% that's really benefiting the most. And the New York Times had an interesting statistic the other day. The top 10% of the households are half of the spending. Now, I'm just going back to this a second. What's been going on? If you look at when Trump started to now, the personal savings annualized was about $1 trillion in January of 25. Now it's about a little less. It's $1 trillion still, $1.1 trillion to $1 trillion. What happened? The income parts went up. So compensation, government transfers, other income did go up, but the taxes and the outlays increased, meaning households they got income increases, but then they spent more than that on their taxes and outlays, and so their savings is down a little bit. So I ignored inflation here because it's only a few months. If you adjusted this, it wouldn't matter very much. But what's basically happening is people, whatever income gains they've gotten over the past 6 months, they've spent. They've spent it either on more expensive stuff or most likely more stuff. I'm going to skip these. I'll go to this one. Surprisingly, and I'm very curious exactly why this is happening, the GDP number that is forecast for the third quarter is very strong. 3.8% is what's called the nowcast from the Fed, from the Atlanta Fed. What they do is whatever data is available to them, they will use that to project the quarterly GDP growth. And they are way higher than the blue chip consensus, which is sort of this muddling along 1%. They're at 3.8. And, I am at a loss for that, because it's not because we got more workers. The workers we have must be incredibly productive to get growth like that. The other option would be something weird going on with imports and exports, but I thought we were kind of through that. So I'm very curious to see when the actual data comes out and we can analyze it, but that seems like a crazy number for a flat labor market.
Well, and of course that the Bureau of Economic Analysis, which publishes that data, is shut down.
Right. That's right. So, but yeah, this estimate from a few weeks ago is, as of October 7th, not even a couple weeks ago, is just very high.
I was seeing numbers more like 2.5, but
yeah, I mean, that's, the consensus is in that 1 to 2 range, I mean, it's in that 1 range. So I don't know. We're going to find out when the shutdown ends eventually. Hopefully it will at some point. We will see. So we've covered the action in the prior meetings. I mean, there are a couple of websites here. We just had the No Kings thing, which was incredibly successful, I thought. 7 million people or whatever were out. Almost no violence from our side, only from the red side for the most part. And it just went, I think it gave everybody a nice shot in the arm to get out. And it was I was in the Buffalo Grove one. There were probably 1,000 to 1,500 people there, and everybody was having a good time for a couple hours and chatting and smiling. And all the cars coming past were beeping. It was something else. It was really loud. It was a very good event, I thought. So nice work for all the people that organized that. And some other ideas here. Act Blue can connect you to all the different kinds of DNC choices, or to individual politicians if you go through their site. And then we've got a bunch of links on here for more information if you want it. But you can also use all the individual pages that we have that typically have the links at the bottom of where to get the information. So this is not in your presentation. I just wanted to tell you there's an interesting statistic I ran into that every state, there are 11 states with more than 40% of the population is college educated. In all 11 of those states, they voted Harris, all of them. So as the educational attainment of the state goes up, the Trump vote share falls. And there's
Trump
math
loves the
behind it. It's
poorly.
a very clear trend. If you're educated, you ain't voting Trump. And then it's a really interesting progression there. So we'll have this on the official one for next month. But I thought this was fascinating to see this. And then this is just explaining some of the dollars. Never mind, forget that one. So I just thought this was really cool. So we'll stop there. And we'll take a couple of questions. Let's end at 9:15 or so. We'll turn off the recording, and if people want to stay on and chat some more, we can. But let's take any questions for 7 minutes or so.
Okay. Did you want me to go with the questions that we still had left from before?
Yeah, whatever you got. And
Sure.
if people raise
Yeah.
their hand, we can go there too.
Okay. Phyllis was asking relating to the birth gap in a documentary on YouTube, which shows how horrible it is to restrict immigration for the USA when the birth over death rate is not 2.12 ratio, then it affects terribly the economy terribly. Do you think we will recover upon Trump being out of office?
I mean, yes, I think once we start letting immigrants in again, yes, we will. I don't think we have any choice, meaning I think that the economy is going to go pretty far south if we don't have the immigrants. You've seen it starting to hit with the jobs numbers, but you're going to see a very stagnant economy, and that means stagnant incomes for people. And they're going to start noticing that things aren't looking so good. So far that hasn't happened. The wages have been growing nicely, but I don't know how you continue that when you don't have more people here and you have more people retiring and dying off. As we start to shrink, it's going to be a battle of people that want the economy to grow and a more diverse and sort of, I guess, exciting population versus sort of the bigots that just want a bunch of old white people here. And
Are Democrats going to do well in the midterms and the 2028 presidential election? And even then, are the Democrats that get elected going to be more pro-immigrant, pro-free trade, or are they going to be more closed borders?
Yep. And I think the Democrats are going to be very nervous about talking about how awesome immigrants are. We're going to need probably a leader outside, kind of like a Martin Luther King or somebody that's a really good immigrant evangelist to come out and start talking about this. And there's no such person right now that I'm aware of. They may be out there, but they're not. I have not seen them. But that is somebody that we really need, and not just to talk about it for immigrants, but talk about it for African Americans and all the different minority groups that are getting persecuted under the Republicans. And there will be some reaction to the Republicans. I mean, the more they squeeze, the more likely that type of a figure or organization is going to emerge to make the case, because the case can be made. There's no doubt. And, we're going to suffer at starting some point as the population shrinks and as these boomers retire and die off. There's just no way. It is demographically inevitable. We will suffer. We will go the way of the UK if we don't.
Susan had a question in the chat about, was that estimate after the head of the department was fired? And since the estimates were coming from the Fed and the head of the Fed has not been fired, the answer would be no.
This one here, is it this one? I mean, I don't think we have to worry yet about the official statistical agencies. We will see, but once their data starts coming back out again, I think it's going to be fine. I don't get the sense that we can't trust it. And we will start to hear a lot of Wall Street people scream if they start to lose faith in it, because it's important to them. And I think we've got Wall Street on our side when it comes to the statistical agencies. I think we're going to be all right.
Yeah. If ADP is reporting negative job growth and the BLS all of a sudden starts reporting 100,000 jobs added a month, then I don't trust them.
Right. And we'll let you know. I mean, Carl and I we'll see it. We'll see it for sure.
Okay. And we do have a question on if there is a link that anybody can be given to get all the slides in one presentation.
Oh, this presentation?
Yes.
Yeah. I published it very early in this,
Okay.
and I'll
That,
try and put it in again.
yeah,
And
please.
everybody gets it. Isn't there a link on the email that everybody gets?
If
Bill
it's,
says
yeah,
he does it, but you know,
it
I
depends on
prefer-
who signed up and how they're signed up sometimes. But yeah,
Okay.
usually it's sent out, after Bill gets it, because I can send that to him, so it's no problem. But should we go on with the rest of the questions?
Yeah, keep going.
go with that,
Okay.
and I'll try and post the link again.
All right, thank you. Beverly is asking, our question is at the end, so bear with me. Approximately 14 states are working on joining together to provide health insurance similar to Obamacare or ACA to uninsured or underinsured individuals in those states, which
Right.
include Illinois. The
Good.
more states that sign on, the lower the premiums should be, I would think.
Yep.
Just wondering what your thoughts are on this idea, and do you have any info on this, and can Trump prohibit these states from doing this?
Oh, those are great questions. I'll have to research it, but I think the initial thought is that's a great idea, and do it. And I don't know how much power Trump has to stop it at the state level. I don't know why he would, but who knows? Supreme Court keeps letting him do pretty much what he wants, so I don't know.
But yeah, one last question that I have seen thus far as of 8:41, Bruce is asking, what is the likely impact on non-AOC insurance?
Non-ACA.
It should be ACA, I would think.
Right. Yeah, minimal. I haven't seen it. We'll look
Well,
into it, but I haven't seen people saying because of the shutdown or this or that or the subsidies going away that's going to affect the non-ACA market significantly one way or the other.
Well,
But I
what
could
you
be
had
wrong.
on the one slide on the good right-hand side of it said that if people drop out of their insurance, the people that are buying insurance are going to pay more. There
If
we
people
go.
drop out,
Yeah, I mean, look at the orange there
yeah,
on the far right.
Yeah.
It's premium increases because healthy people dropped out.
okay, no, that's fair. That makes sense. Yep. I'd have to look at it. I haven't seen I haven't seen a lot of news about premium increases because of the subsidies falling outside of the ACA market. I'll have to look.
Yeah.
And I see Susan, I believe, put another question in after her other one, and I don't know if you addressed it.
We charge by that, by the way. If you do that, there's a charge.
Not to me, I hope.
We
Anyway,
double the price of admission to this meeting.
Right.
thanks. You'll be waiting in line. You'll be waiting in line. Anyway, what are the 11 states with 40% plus of the population having college degrees? If you
Yeah,
are,
I only marked a couple of them on here, so I will get that list. We'll do this. I'll cover this in the next meeting. We'll get into it.
Okay.
Yep.
All right. Well, that looks to be all that I have for you.
Awesome. Yeah,
Thank you,
9:16
everybody.
p.m. Yeah, we'll end here. Should we give a speech for the recording people?
Ooh, let's see. Dora
Carl,
just
do you
took another
want to give the
question.
speech or should I give the
Well,
speech?
if we haven't already shut off the recording, we should tell you that we thank everybody for coming, and we're going to stop the recording, and also that our November meeting will be the third Tuesday, which is the 18th.